India's energy game is evolving fast, and if you're a business leader, you'll want to keep an eye on what's happening next. First up, India's ramping up its strategic crude reserves in a big way. The government just greenlit 3 new oil storage sites. Bikaner in Rajasthan will hold over 5 million tons, Mangalore in Karnataka gets nearly 2 million tons, and there's one more coming up in Bina, Madhya Pradesh. The goal? To boost national reserves from 75 to 90 days, finally matching International Energy Agency standards. That's a huge step for energy security, especially in today's unpredictable world. Now let's talk global oil prices. OPEC Plus is increasing output by more than 500,000 barrels per day for August, which has dragged Brent crude down to around $67.50 a barrel, and WTI to just under $66. Not long ago, though, Middle East conflict sent prices roaring past $75, with some analysts warning we could see $120 if tensions flare again. India's chief economic advisor isn't mincing words. Higher oil prices would mean higher inflation and a wider current account deficit. That's not great news for industry or consumers. So, how are the big players responding? BPCL is doubling down on diversification. They're importing more US WTI crude, about 1 million barrels a month starting May 2025. And they just brought in their first shipment from Argentina. That's on top of what used to be significant Russian imports, though the discounts there have shrunk. Flexibility is the name of the game, as BPCL tries to hedge against wild price swings. Financially, BPCL had a rocky fourth quarter. Profits dropped 24%, hitting just over Rs 200 crore. But thanks to lower crude costs and better refining margins, things weren't as bad as some predicted. The stock's been on a roller coaster too, dropping sharply when Brent spiked before recovering as prices eased. Meanwhile, competition is only heating up. Private refiners like Reliance and Nayara are capturing more market share by snapping up discounted Russian crude and passing savings to customers. That's forcing BPCL and other state-run companies to innovate, rolling out new amenities and retail strategies just to keep up. And let's not forget the big wildcard, a massive crude discovery in the Andaman Sea. If it proves viable, we're talking about a Guyana-scale boost to domestic supply, potentially reshaping India's energy landscape. Bottom line, India's building a stronger energy safety net, but the market remains highly volatile. Companies like BPCL are adapting fast, diversifying imports and rethinking retail to stay relevant. And with global dynamics shifting, every business needs to be prepared for the next big move. Want a deeper dive into BPCL's finances, OPEC's decisions, or that Andaman discovery? Let me know in the comments. There's plenty more to explore.